Hello, and welcome back to the conversation. My name is Michael Barnett from Loanspark, and I'm joined today by Aditya Raikar from Checkbook. Aditya decided to join the podcast today because he thought that it was a great idea to talk about what he's doing over at Checkbook and and how that sort of syncs with what Loanspark is doing as well on the embedded lending side. So Aditya is a FinTech guru, and not only FinTech guru, but knows a lot about what's happening out there in terms of third-party companies who are looking to integrate the embedded lending technologies, and he'll have a lot of information to share with you today. So really looking forward to it. Aditya?
Michael, thank you so much for having me. It's an absolute pleasure, and looking forward to the conversation.
Awesome, fantastic. So let's start here. Let's talk a little bit about Checkbook for those who haven't heard of the company. Who are you? What do you do? And what makes you all special right now out in the market?
Yeah, absolutely. So Aditya Raikar, VP of Growth and Partnerships at Checkbook. Checkbook, for those who don't know, we are a all-in-one money movement API that ultimately provide a versatile and embeddable platform for businesses to simplify and scale their payouts. So really what that means is anything money movement or payments related, we view ourselves as kind of the go-to all-in-one API. We've effectively taken pretty much every single payment rail that you can imagine in the United States, everything from checks, I would hope so because our name is Checkbook, to any instant rail you can imagine, from the more peer-to-peer ones such as Venmo, PayPal, Zelle, to push to debit cards with our partners at Visa, as well as virtual cards, RTP, you kind of name it, right? Pretty much everything within a single API, which in the United States, the payments ecosystem and infrastructure, it's super complicated.
Yeah.
You had checks, right? That's historically how people did it, and still how businesses do in large part, tens of trillions of dollars every year. Then along came ACH, which works for a lot of cases, but there's still challenges there. Typically, you have to kind of pre-onboard your recipients ahead of time. That can cause data privacy and security issues. Can be a little slow, even though it works pretty well. And then with every single other payment method and rail you have, that adds complexity around infrastructure, around compliance, around the different kind of identifiers and data fields that are required from it. So it ends up being more and more of this kind of fragmentation, and we've just kind of built everything into one. Any money movement use case, we'd love to speak with you.
Awesome. So how do you make it easy for companies to embed with you? So think about it this way. Like if I had a money movement need, and I'm considering, and I'm sure you hear this all the time when your team is selling the Checkbook product, because we also hear it sometimes as well at Loanspark. When you're selling your technology, the company or buyer, right, the buyer of your technology, may consider, I can build this myself. I can get this API and that API and yada, yada, slap it together and bam, I'm moving money. It's not that easy though.
Right.
So I guess, what are some of the, if you can expand on the first question, which is, what are some of the reasons why, companies choose you guys, and how do you make it easy?
Yeah, absolutely. I'll take that in two parts, right? One is why do folks, partners and companies typically choose us? And then I think we're getting a little bit more into the, build versus buy, / partner question as well. I mean, in terms of why people choose us, number one, I think, is the versatility of just the sheer amount of payment optionality there is. Point being, no matter what your use case is, we can meet you where you need to be, but more importantly, where your customer needs you to be, the end customer, ultimately, be it checks, be it Venmo, as preferences change and as they adapt. And what we're doing is we're always adding every single thing we can already think of. So if something comes out in the future, right? For example, FedNow, great, we're on that. So you never need to kind of worry about it. So there's a level of future proofing built in there as well that us as kind of the payments experts are happy to take care of. Number two is just making it as simple as possible to embed and kind of white label within your platform, right? Nobody needs to know Checkbook is involved. I think there's a culture there, and I myself very much included. I have this thing where like, I want to be rich, not famous. I think Checkbook kind of
Right.
has the
Right.
same ethos. It's like we'd love to be the kind of powered by, right? White label us. We don't need to be like a household like Meta like name, right? I think Plaid, for example, has done a really good job of that in building use cases, and a number of other companies as well. So we're more than happy to kind of be that. And the third is, there's a really, really limited amount of payment information needed. We call it a one-sided system, but historically, even you look at a digital ACH payment, you need to pre-register your recipient ahead of time. Can cause friction, delays, etc. With us, you don't need any of that, right? Pretty much the way we like to think of it is any payment with the simplicity of a check, name, contact information, amount, off it goes. The payment, get paid
Off it
however you
goes.
want.
Yeah, I've
So
actually
that's
experienced it
keep
firsthand
going.
too. It's really simple and really, it's a very easy, simple. I'll take that back. Simple on the user side, right?
Right.
Of course, on the back end side, super complex, but simple from a user perspective that's using the product, which I think is really awesome about what you guys are doing. You're simplifying the movement of money and simplifying the payments process. And as you mentioned a moment ago, when a company partners with you to offer your technology or to white label your technology within their core set of software, they are future proofing themselves. So I'm going to kind of put some words in your mouth. I'm going to kind of answer the build versus buy thing a little bit. And
Sure.
you can go ahead and tell me that I'm crazy. So when an organization would partner with you all, they're future proofing themselves, because if you build it yourself, it's like I've integrated one API or two or five APIs into some disparate systems or disparate third parties or whatever the case may be. Now, maybe there's a newer technology that I want to integrate into my system. Now, what do I need to do? I've got to spec it out, I've got to get acceptance within my company to make this investment. Then it's got to be prioritized on the roadmap. Then we have
Yep.
to build it. Then we have to test it. Then we have to roll it out to a limited number of our customers to get feedback. Then we can put it out into production for all of our customers. I mean, forget about it. The amount of time, energy, effort, and cost that goes into that, that's the reason why companies should be not building, right, and buying technologies like this from great, solid companies like your company and also Loanspark. So
Absolutely.
that's what I think. So tell me, am I crazy?
Well, you're definitely crazy, but not for that answer. But that's, I think, well, being an entrepreneur by definition is a little crazy. So like, absolutely. But I think, and a lot of people who work in startups, I'd say both you and I, to an extent, are crazy, right? So in the best possible way. But everything you said is spot on. I'll add a few more that I think apply both to Checkbook as well as to Loanspark. It's a lot of the behind the scenes that aren't readily apparent, right? So in the money movement use case, for example, to facilitate payments, ultimately you need sponsor banks where that the money is flowing through. Getting
Right.
those relationships set up, right, is and having been on both sides, I was at Citibank before this and kind of seen it firsthand there as well. It takes a while, right? We're talking minimum kind of 6 to 9 months, potentially years to get each relationship set up. Ideally, you'd like to have more for redundancy and different product variability purposes. Now, just the amount of, I think, time, energy, and effort you need to spend in setting those up is drastically underestimated, not to mention dealing with the regulatory components. What do you need for KYB, KYC? Does it change from originator to non-originator, sender to non-sender? What do I need to ensure that for example, if I put a Zelle payment on there, can I use the branding? Do I need to, from everything big to small, right? That kind of goes with it. How do I monitor the transactions and make sure everything's kind of above board? Am I getting the right AML policies? So you effectively have to, if you want to build it, you effectively have to build out your own payments company, which if you don't have a
Right.
desire to make it your core business, it's really, there are a bunch of studies out there that, and we've done our own numbers and assessments internally that show you really, in pretty much all cases, if you choose to build it yourself, it ends up being not the correct economic decision, which is, I would imagine, the same for Loanspark, right? Just the number of regulatory just awareness that you need. Fair lending is no joke, right? Good luck trying to deal with all that yourself, and dealing with the various bodies behind that. It's just not something that is kind of is visible at the surface. It's way buried way deep there, and once you hit it, it's too late.
Yeah, what I've found, at least what I think and believe, and what I found is it only makes sense to build it yourself if that is an asset, that if that's an asset that you, if that's something that you want to be an asset within your company, to where later your company is sold, you're being purchased because of this asset that you've built, this
Right.
software that you've built, and that becomes an important acquisition factor in your business. Like you said, if you're going to build the checkbook technology into your business, essentially you need to become a payments company. So do you want to be a payments company? Is that
Right.
something that is important enough to be an asset that that would be a reason why your company would be purchased potentially? If not, then let's go ahead and just ride on someone else's technology, right?
Right.
It just
Right.
seems to make the most sense. And that's an important factor. That's an important aspect of our pitch when we're explaining Loanspark to a company that is, maybe they're in consumer lending now, or maybe they're in some segment of commercial lending, but they want to come upstream and offer another segment of commercial lending. For example, an alternative B2B business lender that now wants to offer real estate loans.
Sure.
Right. There's similarities there, but the similarities end at there is a loan and there is an interest rate. That's where the similarities end.
Correct.
Other than that, you have collateralized lending product, real estate, and potentially a business loan is an uncollateralized lending product. They don't work the same. And so, if you want to be a lender that is lending on collateral, and that's an asset that you want to utilize as a factor to value your company, then okay, then maybe you want to be in the real estate lending business
Sure.
and you want to become a real estate lender, like truly a back end lender. Otherwise, for everybody else, they partner with Loanspark because through Loanspark, they can get that white label-y look and feel and polish and be able to offer real estate loans instantly, but they're just doing it on our balance sheet, or essentially it's being syndicated by another bank or other banks that are in the Loanspark marketplace, let's call it.
Yeah.
So,
I think the key term there you said, right? The white labelability. It's got to be like that embeddability needs to kind of be seamless. It's like, hey, it because it's you still got to pass it off like, oh, this is something that we as a platform are offering. It's exactly the powered by, right? The being the player behind the scenes that's powering a bunch of these other cool use cases.
absolutely. So, what have you seen, experienced, or what is your opinion on kind of where embedded lending is today, or embedded lending, embedded payments, embedded systems in in fintech are today? Being as you have a background in built by Citi, probably talk a little bit about that if you'd like, and you have background even before that. So you've seen some things over the years. I guess,
Definitely have.
where do you see things today, and like, what is your idea on like how close we are in this like universal acceptance of embedded lending? I have my opinions, but right now I'm interested in yours.
I think I'll expand that to kind of embedded finance as a whole, or embedded financial services. And in terms of where we are in, I think most vertical SaaS companies that are here today and that kind of continue to expand there, the playbook's been written, right? And I think it kind of goes in order. Number one, in terms of when you're offering embedded financial services as a part of your platform, probably 7 times out of 10, lending's the first one that goes.
Right.
Just number one, right? Maybe even more, maybe 8 times out of 10, lending's the first one off the block. So that playbook's kind of been written. Now, where are we in terms of? I mean, where's the market? Huge, right? And that's why there's still a bunch of, to your point, was working with the bridge built by City Team Bridge built. I think they're part of Foro now, if I'm not mistaken. the opportunity was fantastic, right? That what you see is that there are still just so many uh, underserved segments of the market that they've been able to tap with their partner banks, and they've got some pretty phenomenal, I think, embedded partnerships. One with Walmart and Best Buy that they've been able to expand to their merchants. So the market's 100% there and continues to grow. I think it's every vertical SaaS company and of that kind though is probably either already asking themselves or should be asking themselves when it's really to me now a matter of like when, not if, the embedded financial services becomes a part of it. That's kind of how I think ubiquitous it's getting. So number one off the board is embedded lending. Number two off the board is embedded payments. Now it's a little different because depending on the customer base that you have, it might be the accepting payments use case. So how can we make it easier? Let's say I'm a vertical SaaS company for that serves small home service professionals. It could be, okay, how can I make it easy for my home service professionals to invoice their customers and to get paid, or enable them to pay their bills and other payments they need to make out their employees, for example. So that's where it gets to kind of number two is definitely payments. And then for number three, that's where I think the jury's still out a little bit, and you're seeing a lot of interesting companies in the space that that really are coming up with very interesting products. One, a couple that I think are that I've seen that are personally interesting. One is kind of embedded tax optimization. This company April that's doing a really cool job there. That's an interesting one. Treasurify as well. They're effectively for company embedding. Effectively earning yield and earning alpha on uninvested and assets that are just there right now, which is very interesting. So you're seeing all these kind of products that haven't been there before that platforms are now able to add as a part of their stack. So where does it go after that? Jury's still out, but very clearly number one and two in that space for me are lending followed by payments.
Got it. This is an opinion question, so it's not meant to be controversial, but as you were kind of talking there, it kind of reminded me that there's a company that we work with here at Loanspark, a small startup company called Stripe. You've heard of this startup before, right?
A couple of times.
Right. They're still a startup somehow. I think they have like 30 or 40,000 employees, but they're still a startup. But we use them for our subscription payments here. And we integrated with them at Loanspark because their APIs were developer centric. They've got good documentation and their product was easy to implement. How do you see a company like that, being as though you're at Checkbook and there's likely some overlap there between what you're doing and what like this 300-pound gorilla like Stripe does? Where do you see a company like them and how they've, I guess, influenced or affected embedded payments and lending, by the way, because now they're in lending? And how do you think we're benefiting from that?
I think in large part, they've kind of paved the way for a lot of us, right? And there's, I was going to ask you, right? Like, why did you end up going with Trump? You mentioned it yourself. There's a reputation of being, and I think it's probably directly from their website, right? Developer friendly, easy to use APIs, good documentation.
Right.
They've made it so straightforward for anybody with a few lines of code to just go and process their payments through them. If you're a small startup, why wouldn't you use them? Right? It's as straightforward as can be. It's a very natural place to start if you're exploring just a few things here and there, and you just need to manage, hey, how do we do our charge for our subscriptions? They've done a phenomenal job in that, and I think they're big fans of what they've done for the overall embedded payments and the payments industry as a whole, right? They've kind of made a very unsexy part of the ecosystem like a little bit sexy in as nerdy as way as possible. They've kind of made it a place to be, and a lot of companies have followed in their footsteps there. Now, I think they've done a really, really phenomenal job, especially on the payment acceptance side of the house, of making it as straightforward as possible. Get paid by bank, no problem. Get paid by card, no
Right,
problem.
no problem.
For a price, of course, when you're starting up, right? But
Of
fair
course.
fair enough. You know what you're getting into. So I think they do a really, really kind of good job um, with that, and will continue to kind of grow with a large number of the customers they have. It's now that said, I was reading I think a report a little while ago. Despite Stripe being who they are, they, in terms of their market penetration with regards to total amount of payments processed in the world globally, low single digit percentage points, if not even like in the 1 point something,
Which is actually pretty cool when you
which is
cool
crazy.
crazy because you size the global market and how
Yeah,
big it is and how much opportunity is there. It's huge.
and that's exactly right. So it's like,
Yeah.
how how do folks compete in the space? I mean, there's no lack of opportunity, right? In terms of the market out there, it's absolutely gigantic, I think. But obviously, as with the large company, there are ways, I think, for the Loansparks and Checkbooks of the world to stand out, right? I think as we just with number one, the versatility that we're able to be, and how nimble we are with adding rails in weeks, not months or years, and having
Right.
to be adaptable and really working hand in hand with our customers. I mean, we've won a number of deals and still get this feedback, right? That, oh, I went with Checkbook over other kind of competitors in the space because it was by far the best buying experience I had. You guys, your team would respond to my text on a Saturday, and because I think that translates over right into what level of support you can expect when things go wrong. It's fine when things are all going well, and then if you're not getting great level of support when things are going great, I don't think you can expect it when things are going bad. They're natural growing pains that every kind of company goes through, but I think in addition to that, just the flexibility which folks can kind of embed Checkbook versus some of the more industry behemoths, right? With you don't need to put our branding on there as an example, right? We don't want our logo. You can entirely host your KYB, KYC on your own thing. They don't need to kind of come to our portal to do that. So still a number of reasons that and the market opportunity is massive, and that's
Yeah,
not
the
changing
market
anytime soon.
opportunity is huge. And I think when companies like Stripe, like you said, they've made embedded finance cool.
Yeah,
And I think what they've also done is they've attracted a lot of talent to come into the industry, which is great for the industry in a whole, because what that does is that creates more innovation.
it does.
And so, a large company like Stripe is great for, the small companies, because you want someone to go after because you respect what they're doing. And when I say go after, it's like, you're in your sales huddles or in your meetings, you're like, okay, or you're in your product development sessions. All right, here's what they're doing. Here's how we're going to be better at this. Right. And
Totally.
so large companies make it so smaller companies can build better products at something very specific. You may not be better at everything, but for a small company like Checkbook, or today like Loanspark, it enables us to get really like hyper focused on what exactly it is that we want to be good at. And then we can be better at it than anybody else in the market. And because you have large companies like Stripe doing what they're doing, it brings now, as I mentioned before, more talent and more innovation into the industry. So I'm happy and glad that we have a company and companies like that are doing what they're doing.
100%,
Yeah.
right? And I'd say there are a few points on that one. Number one, could like totally agreed. It's actually, so when what's the term I'm looking for? The like LinkedIn tagline, right? Folks will be like X Goldman, X whatever, X
Right.
Stripe is
Yeah.
now one of them, right? That's the level of talent they've got. It's that where it's like, oh, like you put X Stripe or like
Right.
YC Summer 2024, right? That's
Right.
like, okay,
That's cool.
so it's one of the yeah, it's great. So like good for them. I think number two is even with regards to uh, I think I'm sure Loanspark's done the same. It's exactly what Checkbook has done, right? Like Stripe started on the payment acceptance side of the house, and they're masters at it. They have so much even for someone to try to come in and beat that, it's so hard because they have so much data there that they
Right.
know what's a risky transaction, what's not, because they're just like millions and millions of these data points at their disposal. So that is a strong barrier to entry, no doubt about it. So it's not insurmountable by any means, but it is a barrier. So I mean, Checkbook's kind of taken the other side of the house, which is we started, and our claim to fame, I would say we are obviously unbiased. I don't think there's anyone that does the payout side of the house better than we do. And of course, now we have expanded and grown with our customers to the acceptance side as well. But it's exactly that, right? Find the niche, which is they focus on the pay-ins. Let's go after the payouts and
Payouts.
just do really, really, really well at that.
That's awesome. And that sounds like that's why your customers are selecting you. And that sounds like why others who are considering a product like this should select you as well. Let's talk about some of the things that, at least some of the things that we can talk about that we're working on, or things that have just been released. Before our call, I was talking to you a little bit about that Loanspark. We just released our V2 APIs,
Yes.
and why we did that, and what I think that means for Loanspark. One, our goal as a company is to make embedded small business lending easy for customers that want to offer it. So companies that want to offer it. So if a company wants to offer real estate lending, we want to make it easy. If you want to offer, I don't know, equipment leases because you're a dealer that sells equipment and you need an in-house equipment finance department, we can be that for you. And so we developed or enhanced our API set so that these organizations who are partnering with us, to the extent that they have technical teams, because a lot of them don't, but to the extent that there is a technical team, that they can easily now either build on top of the Loanspark API set, or just make it really easy to send, to push and pull their transaction level details to and from Loanspark. And that isn't something that really exists out there in the market for what we do it and how we do it. Embedded lending company that offers 10 or more products and enables any one company to offer SBA loans through real estate loans and everything in between, all in one API. Just doesn't really exist out there right now. So we spent a lot of time and energy and effort building that and documenting it properly, because we're all in on embedded lending, and
100%. Yeah.
truly believe that it's the future of lending at every level, from local, regional banks through you name it, right? Vertical SaaS company that wants to offer lending or funding to their user base for a variety of different reasons. The whole like build it versus buy it thing, I think that is not even a question.
Right.
It's choose a partner and offer the product to a partner, and you can earn yield on it as well. So I think it just makes total sense. So
Agreed. And congratulations again. Like you said, right? That's nothing really out there in the market like it. So that's huge. And agreed. Fully kind of all in on the embedded. Even for us, right? It's like, hey, even like the vertical SaaS companies are embedding it for their folks to their business customers to go make bill payments. Great. All the way to like the earned wage and earned tip access folks who like want the employees who are doing earned wage access through them with the app. So regardless of the use case, I think this move to kind of embedding and white label, fully behind it and fully with you guys there.
Yeah. What are some things that you've heard, and I can also share stories as well, like when you're out there, let's say pitching your product or discussing your product, what are some of the things that you've heard as points of resistance, which is why companies may not want to do it right now, or some of the things that are delaying the process or delaying buy-in? Like, what are some of the top 2 or 3 things that you've heard or hearing out there?
Yeah, it's a great question. It depends a little bit on the circumstance and the stage of which I think each potential partner is kind of looking. but there are some that we hear. One is, well, we're debating doing it. Sometimes we hear we're debating doing it in house. I think we've addressed that one kind of time and time again, right? And then it's pretty clear as one of them. Uh, One that comes up pretty frequently that we're able to address head on, right? Is listen, payments is the reason I personally think payments is so cool. Is it's a very real life situation, right? Like there are real consequences if things go wrong,
Right.
right? It's not like my social media is down for 30 minutes. Oh no, how am I gonna see what my friend's up to? No, this is real, right? People have bills to pay, and and there are very real life consequences kind of behind that. So one of the ones we always get asked is it ends up not being a resistance point afterwards, but always around security, payment completion, ensuring there's no kind of money laundering going on. The security of the payments, not only of the payments, but also I think your sponsor banks as well as yourself as a company, absolutely paramount. That gets brought up in every single deal that we go through. Right? Is number two, and number three, I would say, is that they're like, well, we're not really sure what the demand is yet. We haven't kind of tested it out. We haven't kind of gone through with it, and it's the question there is, well, you probably wouldn't be talking to us if there wasn't an inclination
Right.
of it's there of some kind. But that's I think when and I would I would imagine it's very similar with Loanspark. We kind of see ourselves as in an advisory role as well, and I think this is really what some of the best practice, kind of going back even to the city days, right? It's like you want to view yourself as a trusted advisor, not someone trying to make a sale, because and we really try and embrace that ethos as much as we can, right? So in cases like that, it's all about understanding what the potential partner is looking to do, who are their customers, who are their end users, what are the demographics there, and then we have data to share, right? There are a number of use cases, there are a number of things we can recommend that say, oh well, actually, we found that if for example, 3 to 4 is probably a sweet spot of number of payment options that you want to offer. Any more gets a little complicated. Any less, well, you can kind of do more there. Um, but also, hey, for this this vertical, for example, in the construction space, this is what we found works. In the hospitality space, this is what we found works. We're able to I mean, and that's, I think, one of the benefits of partnering versus building in house as well. There's all this institutional knowledge and all these other use cases that you're getting insights. It actually kind of takes me back to my trading days, right? Which is like, you called hedge funds will call different banks for different color. It's like, well, why don't you just keep one bank as your main trading partner? It's like, well, yeah, but you could do that, but then you're missing out on all the market color and what you're actually seeing there, and the different kind of perspectives there. So that that these different perspectives and what you're seeing out in the market is kind of irreplaceable.
What are some of the ways that you're overcoming the security concern or debate? And the reason why I bring that up is because we get the same thing. It's either security or it's how a mistake on your end can impact my brand in the white label context.
Yeah, it's super critical, right? And there's certain things that we always kind of point to there. I mean, number one is every certification that you can imagine, right? PCI, SOC 1, SOC 2, HIPAA, NACHA, you name it. Yeah, it's all it's all there.
Right.
And that's table stakes, right? At least like SOC 2 and all that. Like it's kind of table stakes in the business. So that's one, right? But number, at least for us, number two is we're super proud of our fraud rate being kind of under 1 basis point, like under 0.01%. So that's something that we're super proud of, that we've just kind of honed and developed over the years. So it's something we stand by pretty strongly there. And then also the choice of who we work with for our sponsor banks, right? I mean, in terms of we have like some of the largest and most well-renowned institutions who are not only sponsor banks of us, but also have invested in us and sit on our board. So when you add all these factors together, as well as a track record of doing, multiple tens of billions of dollars a year of volume every year, and operating at that level, and having the kind of, lack of fraud rate and everything that we do, that tends to make that a pretty quick conversation.
Awesome. And I would agree with you. I think as a company considering partnering with an embedded technology product, platform, or service, I think it is important to ask those questions. And I think it is important to evaluate how secure, how legitimate the partners are of that organization.
100%.
And the practices of that company. And that is because that service, product, software, API, whatever you want to call it, is representing your business. And the mistakes that could occur could affect the business. So companies like Checkbook have invested heavily to ensure those things don't happen. And there's a lot that I'm sure that you all have, just like we have at Loanspark, to protect ourselves against those negative aspects of the business. And back for a moment to the build versus buy concept, if you build it yourself, you won't have that, right? I mean, the investment in security alone that we make is significant, right? Just in security alone. Forget about, the whole, like, how to manage and operate a white label product and do so and do so in a way that is where we're very successfully representing other companies' brands.
Right.
So at Loanspark, that's our core business. We represent other companies' brands. We do it really well. My entire career, that's what I've done for 20 years, is private label, white label business. So all of that history, all of that knowledge, all of the data and information is woven into the fabric of what we do at Loanspark, so that when a company is looking to choose us or choose a embedded lending vendor, that is something that we lean on, because most other companies, they don't do that, or they don't make those investments in the certifications, like you said, the SOC 2 or the IS. We're not ISO 2701 because we're not international, but in terms of the different certifications, security certifications, et cetera, that we invest in here, we've done that not because we needed it because we weren't doing something right. We did it so others who are evaluating us, right, see that, yes, they are doing it. But we were already doing it before the certifications. That's just the way we built our platform. That's the way that we managed our technology stack. That's the way that we managed our infrastructure. And that's the way that we were already managing our internal data. But
it's the culture.
Yeah.
Right. Like I was going to call it a lifestyle for a second, but no, it absolutely is the culture. And that comes top down. And that's just how it just, I think, spreads in the company. And I don't think we need to open the full rabbit hole of why culture from the top down is like absolutely, critical. I think that just goes without saying, but 100% agree.
Yeah, but all super important, because those investments are meaningful. And that's something that I think that many organizations who are choosing a company like Checkbook or a company like Loanspark, all of your customers aren't probably the largest enterprise, right? Like,
oh no,
$1 billion small companies who are using your product. And like a lot of smaller companies are using our product. So they're not going to necessarily even think of those types of investments because it may not make sense for them. But at least this aspect of your business that's integrating our APIs into your product does. And that's important. So this has all been great. I mean, thank you for sharing your knowledge about what you're doing at Checkbook, the reasons why customers are choosing you, some of the things that you all are invested in. I think these are the reasons why other organizations should be choosing to work with the good embedded finance companies, because there are ones that aren't as good. But when evaluating an embedded finance company, the things that we've discussed on this podcast are the things that you need to seriously consider when evaluating an embedded company to represent your business and your brand. So with that said, Aditya, any closing thoughts?
Just huge kudos to you and the team as well, Michael. To yourself, to Sasha. It's funny how small this world of embedded finance is, right? Like even um, actually, I'll tell the story of how we originally kind of got in touch. It was FinTech Meetup 2023, a random lunch table. I don't random lunch table, and I got talking with this with one of the representatives of your sales team, and just kind of got talking around embedded lending, small business lending, of course, with from my time at Bridge Built by City. I was like, oh, great! Like we easily just spoke about that a little bit. That individual that introduced me to Sasha, your co-CEO, and we just hit it off from there. Right? We're like, hey, this is it's a small world. We have very similar, I think, attitudes towards everything. Let's figure out a way to work together, right? And we're still figuring out the finalities of kind of how we do that. But in the meantime, I think it's goes hand in hand. Just like we're kind of up and coming at the same time, have very different, very similar approaches to how we approach embedding and the financial services and kind of how we work with customers and partners in general. So been a pleasure, and very much looking forward to our just to see both of our journeys continuing.
Absolutely. And likewise, glad that we were able to connect. Glad that we were able to spend time together. Super, super valuable. Thank you for sharing yourself and your knowledge with me and our audience. I really appreciate that, and should definitely do it again sometime.
It would be my pleasure. Thank you very much for having me, Michael.